Welcome to the deep dive. We often talk about the heart of our communities, right? That idea of Main Street.
Absolutely. The local spots, the places you know.
Exactly. That coffee shop, maybe the family bookstore, or, that tech startup just getting going. They're vital.
They really are the backbone in many ways.
But it always comes back to this question. How do these places actually get the funding? The cash they need to start or to grow and really make a go of it.
That's the million-dollar question, isn't it? Access to capital.
Okay, so let's unpack that today. We're diving into, a potentially really important piece of legislation. It's called H.R. 754. The official name is the Investing in Main Street Act of 2025.
Right. And for this deep dive, we've gone right to the source material, the official congressional documents from congress.gov.
Yeah, we want to get this right.
Our plan is to break down what this bill actually says, what it's trying to do, understand its journey so far, and maybe why it matters. It connects to finance, obviously, but maybe more importantly, to those small businesses we all see and rely on.
Absolutely. Our goal here is to figure out what this bill really does, who's pushing it, and then the big one, what could it mean for you, for local jobs and maybe new opportunities, just the way money flows to entrepreneurs.
Let's dig in.
Okay, so first things first, let's get the context. H.R. 754, the Investing in Main Street Act of 2025. It's part of the current 119th Congress, which runs, 2025 to 2026?
That's right. Sets the time frame.
And this specific bill, it looks like it was introduced by Representative Judy Chu. She's from California, the 28th District. That was back on January 28th, 2025.
So fairly recent. And the interesting part is how quickly it seems to have moved, at least initially.
Yeah. What happened?
Well, it was introduced in the House of Representatives, naturally.
Right.
But it didn't just sit there. It actually passed the House on February 24th, 2025.
Passed the House already. Wow, okay. And here's something I found interesting. It passed by what they call a voice vote. And it was on a motion to suspend the rules. What does that actually mean in practice? Sounds like it went through pretty easily.
That's a really good catch. Yes, a voice vote under suspension of the rules. That's significant. It basically means it bypassed some of the usual longer procedural hurdles.
Faster track.
Exactly.
Yeah.
It's typically used for bills that are seen as non-controversial or ones that have really broad bipartisan support. You need a 2/3 majority to pass something under suspension. So the fact that H.R. 754 passed this way suggests there wasn't much opposition in the House. Lawmakers likely saw it as a positive step, maybe low risk, good for their districts.
So a strong signal of agreement then. Okay, so it clears the House. What next?
Right after passing the House, the very next day, February 25th, it was officially received in the Senate. Standard procedure.
And then?
Then it got referred to a committee. In this case, the Senate Committee on Banking, Housing, and Urban Affairs. Which makes sense. Before that, in the House, it had been with the House Small Business Committee.
Okay, House Small Business, now Senate Banking. So it's cleared that first big step, passed the House, and now it's basically waiting for the Senate Banking Committee to take it up.
Precisely. It's in the next stage of the process.
All right, so we know where it is. Now let's get to the core of it. What does H.R. 754 actually do? What's the proposed change?
Okay, the main mechanism here is about small business investment companies, or SBs. You heard of these?
I have, yeah. They're licensed by the SBA, right? The Small Business Administration.
Exactly. They're privately owned funds, but licensed and regulated by the SBA. This lets them use government-guaranteed debt to basically increase the amount of private investment money they have available for small businesses.
Okay, so they help fund small businesses. How does this bill change things?
This bill focuses on banks, or rather, certain banking entities. It authorizes them to invest more of their own capital into these SBICs. It also covers entities set up specifically just to invest in SBIs.
More capital from banks into SBIs, got it. Is there a specific change, a number?
Yes, and this is the key part. Right now, these banking entities, they can invest up to 5% of their capital in surplus into SBICs.
Okay, 5%.
This bill, H.R. 754, proposes to raise that limit significantly, up to 15%. 15%.
Whoa, okay. From 5% to 15%. That's tripling the potential investment cap.
It's a substantial increase.
So let's connect the dots here. Why does that matter? Why allow banks to potentially put 3 times more money into these SBIC funds? What's the hoped for impact?
Well, the thinking is pretty straightforward, really. More investment capacity for banks means potentially more capital flowing into SBICs. And if SBIs have more capital,
Then they can make more investments in small businesses.
right, exactly, more fuel for the engine.
So think about that bakery needing new ovens, or maybe that local tech firm needing seed money to really get started. This could potentially unlock a lot more funding for exactly those kinds of Main Street businesses.
That's the goal. It falls under the broad policy area of commerce. It's fundamentally about trying to improve the flow of capital to stimulate economic activity, particularly for those small and medium-sized businesses, the ones that often drive local job growth and innovation.
It makes sense. So tripling that limit from 5% to 15% sounds like a big deal. But why was it 5% in the first place? Was there a reason for that cap?
That's a really important question. Yeah, the 5% limit wasn't just picked out of thin air. Historically, it came from a place of prudential regulation.
You mean?
Meaning regulators wanted to be cautious. They wanted to ensure banks, which handle people's deposits, weren't putting too much of their capital into potentially riskier, less liquid investments like venture capital or private equity, which is kind of what SBI's investments resemble. It was about balancing risk, protecting the bank's stability.
So keeping banks focused on more traditional, maybe safer lending?
In part, yes. But the thinking might be evolving. Raising it to 15% suggests a view that perhaps SBI's investments, especially being regulated by the SBA and having a track record, warranted a different risk assessment now. Maybe the benefits of channeling more capital to small businesses are seen as outweighing the older concerns, at least up to this higher threshold.
That's interesting context. And you mentioned SBIs have funded some big names historically.
Oh, absolutely. It's often forgotten.
Yeah.
But some, really iconic companies got crucial early funding partly through SBEs-backed investments. Think companies like Apple, FedEx, Intel, Costco. The list is actually quite impressive.
Oh, wow. Okay. So this isn't just about tiny startups, potentially. It's about growth capital at various stages.
Precisely. And SBEs offer different kinds of funding, too. It's not just loans. They can do debt with equity features, where they get a small stake, or even direct equity investments.
Yeah.
That flexibility is key for businesses that don't fit the standard bank loan criteria.
Okay, so flexibility, more potential capital. But let me play devil's advocate for a second. If banks put way more money into these potentially riskier venture-style funds, does that add risk back into the banking system? Is that a concern?
It's a totally valid concern, and one the Senate Banking Committee will definitely scrutinize. From the bank side, it's not just about the percentage. It ties into how assets are risk-weighted, their overall capital adequacy.
Yeah.
It's complex. But the structure of the SBIC program itself has built-in safeguards. Remember, they're licensed and regulated by the SBA. There are rules about how they operate, how they manage capital, reporting requirements. Plus, the government guarantee on the debt portion provides a cushion. It's designed to be a structured, regulated way to channel investment, not just, throwing money around.
So smart capital, hopefully not just more capital.
That's the idea. Managed risk for a specific policy goal, boosting small business growth.
Okay, let's bring this back to the listener. What does this actually mean for you? If you're working, maybe raising a family, just going about your life, how does a change in bank investment limits for SBIC actually affect things?
Well, potentially in quite tangible ways. If SBICs get more funding and invest in more local businesses, that could mean more job creation right in your community.
New jobs, okay?
It could also mean seeing new, innovative products or services pop up locally. Think about competition driving better options for consumers, and maybe even more economic stability overall.
How so stability?
Because when local businesses have better access to capital, they're often more resilient. They can maybe weather economic downturns better, adapt, innovate. That creates a more stable local economy, a stronger tax base for schools, roads, things like that. You can make the whole community stronger.
So it's sort of a ripple effect, empowering entrepreneurs, which then strengthens the community fabric around you.
That's a good way to put it. It's trying to create those positive ripples.
I like the analogy you used earlier, thinking of SBIs as like specialized vehicles for funding small businesses.
Right.
And this bill, HR 754, it's like giving banks a much bigger, maybe easier to use on-ramp to get their money into those vehicles. The old 5% limit was a smaller ramp, maybe a bit restrictive. This 15% limit is like a wider multi-lane ramp, more capacity for money to flow into those SBIC vehicles. And if the vehicles are fuller,
they have more fuel to help those businesses get on the road and really accelerate their growth.
But it's not just about the amount of traffic on the ramp, is it? You mentioned something deeper there.
Exactly. For people really tuned into this, it's not just volume. It signifies a potential shift in how we view the partnership between large financial institutions and local economic development. It's embedding banks more formally, with regulatory comfort, into this specific channel for supporting small business growth, a channel overseen by the SBA. It's connecting Wall Street's capital capacity more directly, maybe more effectively, with Main Street's needs.
That's a fascinating perspective. So wrapping up our deep dive today, we've looked at H.R. 754, the Investing in Main Street Act of 2025.
We've tracked its quick start in the House, landing now in the Senate Banking Committee.
We've seen its core idea, upping the limit for banks investing in SBICs from 5% to 15%.
And explored how that seemingly simple change could channel significantly more capital to small and growing businesses across the country.
Which could mean more jobs, more innovation, stronger local economies.
Potentially, yes. That's the intent behind it.
So it leaves us with a question, maybe for you, the listener, to think about. As you look around your own town, your own community,
what role do banks and other financial players seem to play right now in supporting local businesses? Do you see it? Do you feel it?
and then how might a change like this one, allowing banks to invest much more in these specialized small business funds, how might that actually reshape things? The future of entrepreneurship, local growth, right where you live.
Yeah, it's an interesting connection to ponder. Policy, finance, and the everyday businesses that make up our communities.
Definitely something to think about. Keep those curious minds buzzing.